Let's talk about what's happening in the housing market because there are three things happening at the exact same time as we approach the end of 2024. Number one, the Federal Reserve Bank is cutting interest rates, but mortgage rates are going up. Number two, we are seeing the lowest number of home sales since 2010 during the Great Financial Crisis. And number three, we have an election right around the corner. And Harris and Trump both have their own proposals on how to fix the housing market, and you have some home buyers and sellers that are confused as to what they should be doing. So let's jump right into this because I want to break down each one of these, starting with what's happening in the mortgage market. In the beginning part of 2024, if you wanted to get a 30-year fixed rate mortgage, you were going to be paying upwards of 8% on that mortgage. Then, as people got excited about the Federal Reserve Bank potentially cutting interest rates, we started to see mortgage rates fall up through September 17th. On September 17th, if you wanted to get a 30-year fixed rate mortgage for the first time, you could get a mortgage just under 6%. On September 18th, one day later, the Federal Reserve Bank began cutting interest rates. They announced that they were going to cut interest rates by 50 basis points, meaning 0.5%, and that they were not going to be as aggressive with interest rate cuts as some might have liked. And this then began the mortgage interest rate rising era that we've been seeing for the last month and a half. What do I mean by that? There's a difference between the mortgage rate that you pay and the interest rate set by the Federal Reserve Bank. The Federal Reserve Bank sets the federal funds rate. That's not your mortgage rate. That's the interest rate that banks pay each other when they borrow money from each other. When banks charge you a mortgage rate, there's a couple things that they pay attention to. Number one is their cost on this money, which is, of course, the federal funds rate. But then number two is what's the market rate for a loan? And where they go to see the market rate for a loan is the 10-year yield. This is what banks like to look at. The 10-year yield looks at if you were to loan your money to the United States government for 10 years, what interest rates would the government pay you? And what we've been seeing happen is that this 10-year yield has been rising. Now, there's a couple of reasons why it's been rising. I'll talk about that in just a minute. But as the 10-year yield has been rising, the bank is saying, you are a more risky investment than loaning money to the government, because the government can, of course, just pay out whatever amount of money that they wanted because they can tax people. They can work with the Fed to print more dollars. So it is less risky to loan money to the government. And so if we, the bank, have to loan you money, we have to charge you a higher rate to make up for that added risk. So as the 10-year yield has been rising over the last month and a half, mortgage rates have also been going up, which then begs the question, why has the 10-year yield been rising? Now, we've been covering this in market briefs, but there's a number of reasons why the 10-year yield is rising. And if you go and read Wall Street Journal or CNBC, different articles will say different things. Some articles will say that investors are worried about inflation. Some will say that investors are worried about the national deficit. Some will say that investors are worried about the national debt or some sort of recession that might be coming. But you can't really pinpoint one reason why the 10-year yield has been rising. Instead, you want to understand the general gist of what causes yields to rise. And more particularly, what that means is if I'm an investor and I'm going to loan my money to something, I'm going to base my return relative to the risk in this investment. And so if people feel that loaning money to the government is more risky, they're going to want a higher rate of return. And as we've been hearing news about inflation, the economy, our national debt, our national deficit, this has been correlating with the 10-year yield rising. So there's a number of reasons that investors might be more concerned about the dollar, inflation, national debt, whatever it might be. This has been contributing to a higher yield, which means that banks also then charge you a higher interest rate. What does that mean in plain English? That means that as investors get more concerned about the economy, inflation, and the dollar, the interest rate that you pay on your mortgage also goes up. So yes, you want to pay attention to the federal funds rate, but you also want to pay attention to the 10-year yield. Now, if you want to stay up to date on what's happening in the markets when it's happening, Market Briefs is a free financial newsletter where every day my team is breaking down what's happening in things like the housing market, the stock market, the crypto market, the global economy, and our own economy into a fun, witty, and easy to read newsletter. You can read it in less than 5 minutes every morning, and it's completely free. So if you have not joined Market Briefs yet, I got the links for you to join down in the description below. And this brings me to the second part of the video that I want to talk about, which is the frozen housing market, more specifically, slowing housing sales. If you talk to any realtor, if you talk to any mortgage banker, the thing that they don't like about the housing market is that there are not that many transactions happening. Realtors and mortgage bankers get paid on commission. The more deals that happen, the more checks that they get. Now, sure, the checks today are bigger than before because homes are a lot more expensive, so the commission checks are larger, but the number of transactions have been falling. In fact, just a few days ago, we got a new report saying that home sales, the number of home sales happening in September, fell to the lowest number we have seen since 2010. It was even slower than the August number that we got, and August was also a record-breaking number. And this is where the National Association of Realtors obviously is concerned because they're worried about the realtors, and the chief economist at the NAR, the National Association of Realtors, even spoke out about this. Here's what they had to say. Quote, "The factors that would drive higher home sales, such as mortgage rates, meaningfully lower now compared to 1 year ago, inventory beginning to increase, and of course, jobs continually being added, and yet home sales are stuck at low levels." What does that mean? It seems like we have the recipe for a growing housing market. We have mortgage rates that are lower now than at the beginning of 2024. We have jobs keep being added into our economy, and we have more inventory of homes now than 12 months ago, although we still have a low inventory number. But despite that, we're not seeing home sales grow to where realtors would like them to be. And this is where a lot of people are concerned as to what does this mean for the economy, for the housing market? Where is this going to go? And of course, we don't know that. Everybody has a prediction, and I'm sure you do too. But the key thing that I want you to understand here is as we continue to see these low inventory numbers. Yes, inventory numbers are higher today than 12 months ago, but they're still relatively low. And as we continue to see these low transactions, we're still seeing high home prices. And these high home prices are tough for many people to justify, considering home prices have gone up by 50 to 65% in the last 5 years, while incomes have only risen by about 20%. And so when you have the cost of housing growing significantly faster than incomes, it's become more expensive for people to go out and buy those more expensive homes. Not to mention the fact that mortgage rates today are a lot higher than what they were in 2020 and 2021 and even into 2022. And so not only do you have to pay more dollars to buy that home, but you also have to pay more interest on those dollars, which is why it is so much more expensive, so much less affordable to fix this problem, so much less affordable to buy that home. And this is where now we have politicians that are hoping to fix the problem. Now we have an election coming early in November. We also have the Federal Reserve Bank meeting early in November. But focusing in on this election, not trying to get political, both candidates, Harris and Trump, have their own proposals on how they will fix the housing market, how they're going to make housing more affordable. And what I want to do is talk about what these proposals are. That way you can make your own opinions. Again, I'm not a political channel, not a political commentator. I'm here to talk about finance and money. That way you can be a financially smarter investor. So let's talk about this. There are two main proposals that Harris has been talking about to help solve the housing affordability crisis. Number one, the one that has probably gained the most PR attention, is that Harris has proposed giving out up to $25,000 in down payment assistance to first generation homebuyers. And number two is she has proposed offering a tax incentive to home builders to build new homes to increase the supply of homes. We'll talk about what this means in just a minute. Trump, on the other hand, has proposed a few things. Number one, he has proposed tax incentives for home builders to continue building homes, while also cutting unnecessary regulations on home construction to make it easier for home builders to go out and build homes. And he's also talked about making some federal land available for residential construction. And then on a slight tangent, he's also talked about fixing the housing market by banning, quote, undocumented immigrants from getting mortgages or access to housing. Essentially, removing some people from the country or removing some people from the housing market to make it easier for people in the country that are citizens to get access to that housing. So let's talk about this for a second. On the Harris side, proposing $25,000 up to $25,000 in down payment assistance to first generation, first time home buyers. The concern with this is, of course, if you give people money to buy homes, free money, then there's a chance that home prices could go up even more. Because what are we doing when we give people access to free money to buy homes? Well, of course, you increase demand. And as you increase demand, that can help push home prices higher. Because if you have more buyers entering the market saying, hey, I have $25,000, $10,000, $5,000, whatever it might be, to go out and buy a home, I can go out and pay this much more money to go out and buy a home. And so if you give people $25,000 to go out and buy a home, is there a chance that people will then start just paying $25,000 more to go out and buy that same home? That's the risk that some people have proposed. Secondly, she says that she wants to offer a tax incentive to builders to go out and build new homes. That is similar to what Trump has said as well, that he wants to offer tax incentives to home builders and potentially home buyers to go out and buy homes. Now, of course, just like with the down payment assistance, are there risks with offering tax incentives to builders? Sure. The risk is that you're not potentially getting tax dollars. The risk is that builders may be incentivized to build homes that are not profitable. So that's going to be up to you. On the Trump side, creating tax incentives for home builders and home buyers. What does that mean? Well, just like with Harris, there's risks with that. If you give tax incentives to home buyers, are there risks? Absolutely. Because that might mean that people are buying homes that they can't afford. If you cut unnecessary regulations on home construction, that might mean that builders start building homes where they shouldn't, how they shouldn't, they start cutting corners. And if you make some federal land available for residential construction, what's the risk with that? Well, you're getting rid of some of that federal land. And then with banning undocumented immigrants from getting mortgages or access to housing, what's the risk with that? Well, that could be more of a human rights concern more than anything else. So these are the things that you want to be aware of as to what's happening in the housing market. And of course, this has some people concerned and confused as to what to do because they're wondering, should I wait to buy a home until after the election to see maybe I'll get some free money, maybe I'll get some tax incentives, maybe I'll get some other bonuses. But we'll see what happens with that. So now I'd like to hear from you. What do you think needs to be done to address and fix the housing affordability issue? Let me know down in the comments. And of course, we'll be keeping you posted on what's happening with market briefs. If you haven't joined yet, I got that link for you down in the description as well.